Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the past 48 hours, the market has pretty much been in a stalemate situation in terms of the fact is it can't break to the downside nor clear the level of 67.35. Having backed away from there for the third consecutive time after posting a somewhat hanging man and also a negative candle on Wednesday, the market is now recovering into the European session with the midway point holding for the RSI and also a positive. MACD may actually see another upside surprise, but likely to struggle towards 67.35 until we see that break. The risk of the downside is still holding at around 65.90. All eyes on the US Federal Reserve with 25 base point rate hike expected at 5 a.m. Sydney time, but at 5:30 a.m. we will be seeing what the question and answers are from the Federal Reserve and also the statement. Would he be dovish? Would he highlight the fact that the banking sector still remains fragile? If so, that could give a little bit more of a dovish tone to the statement and therefore put a little bit more of an upstep into the euro as it now tackles a level around 107.8085. There is a little bit of divergence and also a positive ADX that may actually help see a rise, but the dollar index is still remaining around 102.90. A close of New York of 103 under, then it would see a move down to 101. This would inject momentum for the euro to rally on to 109. The dollar yen, well, the market seems to have found a little bit more terms of strength as the yen appeal to safe haven slowly diminishes. Not quite getting the break for the midway point, but keep an eye on it as the market may actually rally on, and I feel there is potential to 134 and reassess. With the divergence kicking in, the pound did pull back, but not as bearish as some may have liked, and it holds around the lows of 121 to 122. In light of the pattern here, we are not breaking down as much, and all eyes will turn to the Bank of England for the Super Thursday when they expect 25 base points and see what the statement says. Would it be dovish? And if so, could actually splurge a little bit of a mixed price action, but the bulls still seem to be navigating higher. So we should, at this stage, rule out 123.15 challenge, and let's see if the market can actually uphold its current rally. Well, the market tumbled heavily for the spot gold as it now takes that level of 1,968 and reaches its target of 1,939 to 38. Technicals are heavy. Safe haven demand seems to have actually vanished and therefore has put a little bit more heavier point to the actual price action that could weigh in onto the lows of 1,900 and reassess from there. The rebound in oil has extended since 64.5 and now looks very much towards its target of $72 after clearing 68.80 and reassess from 72 as we may see a little bit volatile price action. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.